Welcome to World Business. From hosting COP29 to continuing its COP presidency and launching its first ever green bonds, Azerbaijan is a country busy building a future-proof economic infrastructure able to make the most out of new market opportunities, alongside accelerating energy transition and creating lasting partnerships. In this special report, we take a closer look at how Azerbaijan is balancing its foundational industries with a growing appetite for environmental, social and governance investing, all against, of course, a backdrop of global financial volatility.
Once the world's first oil town, Baku is now navigating a delicate transition, from fossil fuels to future finance. In 2025, Azerbaijan's economy finds itself at a crossroads. Forecasts put GDP growth at 3.5%, a slowdown driven by easing investment and stabilizing hydrocarbon production. But behind the numbers lies a broader shift in direction. The financial center of the capital is undergoing a quiet revolution. In March, SOCAR launched its first ever green bonds on the Baku Stock Exchange, a milestone that positions Azerbaijan within the global movement towards environmentally sustainable investing. Green bonds are part of a growing category of ESG finance, environmental, social, and governance, which is reshaping how capital flows across borders. These aren't just symbolic gestures. Green bonds fund real-world projects, from wind farms to solar panels, from clean water to sustainable transport. And crucially, they're seen by many investors as safer, more thoroughly vetted assets. Hosting COP29 last year has given Baku added momentum. The government has set a clear target: 30% of the nation's electricity from renewables by 2030. Projects are already underway, including an interconnector with 4 nations to deliver Caspian wind energy to Europe. But all of this is unfolding against a volatile global backdrop. US Treasury yields are rising once again, currently hovering above 5% for short-term notes. Tariff policies introduced by the Trump administration have triggered price increases at home, driving inflation, and with it, demand for higher returns. For Azerbaijan, that volatility hits closer to home. The manat is pegged to the US dollar, ensuring exchange rate stability for trade. But it also means that global financial shocks echo loudly within the domestic economy. Still, inflation here remains well managed, forecast at 5.3%, comfortably within the central bank's target band. That relative stability is giving officials space to pursue deeper reforms. International partners are taking notice. The European Bank for Reconstruction and Development and the European Investment Bank are both exploring opportunities to issue green bonds locally, signaling confidence in Azerbaijan's green finance potential. Meanwhile, demand is rising, especially from a new generation of investors. For them, ESG is not a buzzword, it's a benchmark. They want portfolios that balance profit with principle, returns with responsibility. Each green bond tells 2 stories, one of capital growth and one of climate stewardship. Whether it's a turbine on the Absheron coast or solar panels on a school roof, these projects show what sustainable finance can deliver. Azerbaijan isn't walking away from its past, but it is preparing for a different kind of future. One measured not just in barrels and balance sheets, but in cleaner air, greater resilience, and deeper investor trust.
Now, to unpack what this shift means for the region and why global markets are watching US Treasury yields so closely, we sat down with a financial analyst right here in Baku. Thanks very much for coming to see us. We're not too far from the Baku Stock Exchange, but we appreciate you coming into A News nevertheless. Let's start by talking global. US Treasury yields, what's going on? Are they rising? Are they falling? Give us the objective overview.
So thank you for having me here. It's a pleasure to be here. So first, if we want to talk globally and talk about the US Treasury yields now, we have to go back a little bit, like 2 or 3 years ago. So after the pandemic, the inflation was like on the high, because the production and the supply was going down because everything was closing up. So the prices and economy was in a contraction, so the inflation was going up. And this, of course, as a result, gave it way to increasing treasury yields in 2022. Right now, treasury yields are still rising, but the management, as you know, changed in the US government. So Trump came, and with it came a lot of political things. So politics and finance, economics are very, very interrelated. So right now, treasury yields are on the high. They're high, as I know, it's 5.5 or 5.25. I'm talking about the 3-year treasury yields. But because Trump implemented tariffs on other countries, the domestic prices have risen. So what's a tariff, people can say? So many people think that Trump, while US is imposing tariffs on other countries, it's bringing the prices of other countries, so the cost of other countries. But it's not actually the way it is. So tariff is like you're buying something like a product for $4 from, let's say, an X country and bringing it to the Y country, so exporting it. In the Y country, if exposes tariffs on the X country, the domestic prices rises up. So actually, US is imposing tariffs on their own citizens. So they're saying that if you want to export this from another country, you have to pay more for this. You have to pay this tariff. So the domestic prices are going up. This can be taken as two-sided because it means that the people are paying more for the products they have been paying less. And the other way of it is that the domestic production will go high. So this, of course, increases the yields in the country because the exports are going down, imports are going down, imports are going down, exports are going high, and the currency of the US dollar is strengthening because the exports, people are more and more demanding the US dollar. So people in other countries will come to the US and put their money on the treasury yield, so the demand for US treasury yields are going high. But of course, there are some other things to mention, which is that Trump mentioned that it has a plan to bring power to the president so that they can change the US Fed's chairman. So this means Fed has always been an independent governing body in the US economy. So it has they say it's a partisan organization. Why? Because it's neither liberal, it's neither a Democrat, neither a Republican. It has no affiliation with any political body, so it's a fully independent body. US saying that we are giving now the power to change the Fed's chairman gives volatility to the market. It means that what is the faithful representation and the credibility of Fed? So it decreases. So in the short term, it decreases, it changes the interest rates. People start to demand more because there is a risk to this. But if you look at the 10-year and the 30-year US Treasuries, 10 years are linked to the mortgages and 30 years are mainly bought by the insurance and the insurance companies and like pension funds. You will see not too much of a change because such short influences does not influence the rate of 30-year, 10-year US Treasury bills. But in the short run, the yields are going high. But to be honest, I think it was in the last September or October, U.S. Treasury the Fed was always saying that they are planning to bring the rates down because now it's going too high, so they have to manage it. But to be honest, I will be very frank with you, with the new administration in the power, and it's like it hasn't been too much. It's like not a year that Trump has came back, so it's very volatile, and that's for sure that we know that's very volatile, and we are very, very myself, I'm very skeptic about the rates going high or low, so everything can happen at every moment. But I kind of can say that the main effects will be on the short-term US Treasury yields, like 1 year, 3 year, and 5 year.
Yeah, it's interesting. That volatility, I think, is worrying a lot of people. One of the other areas where we've seen some effect of that is in forex, foreign exchange. Yeah. Azerbaijan has its currency pegged to the US dollar, doesn't it? Can you just explain a bit more about that process and whether you feel confident right now that that mechanism is effective?
I can say that it's not only Azerbaijan, it's some other countries are also pegged to the US dollar. So what it gives you stability. So you have, every country has trade relations with other countries. So exchange rate dramatically influences this trade. Why? Because if your currency is getting more and more expensive, I will be less and less likely to buy from you, because for you the price is the same, but for me it's getting more and more expensive, so I will go and look for alternatives. So Azerbaijan, I think it was 2015 and 2016, there was a difference in the rates, there was a change in the rates. After that, the US is pegged in Azerbaijan, and other currencies are pegged to the US. So if the euro and euro-dollar exchange rate changes, Euro-Azerbaijan exchange rate changes because our currency is pegged to the US currency. It has a lot of benefits, of course, as I said. Trade is always stable, and you know that you don't have any currency risk. But how it works, so overall, the floating rate, we have pegged and we have floating rate. So floating rate means that the exchange rate will change daily or monthly or weekly, it doesn't matter. So what happens is that we are having a trade. So I have an inflation and you have an inflation in your country. So if your inflation is higher than mine, it means that your income is going more and more higher than mine. So it means that CPI, we call it CPI, Consumer Price Index. So if the Consumer Price Index is going high in my country and relative to yours, it means that my exchange rate will be more expensive and more, let's say, I don't want to say strong, but like more expensive relative to your exchange rate, because now, because my income is going high and because my prices are going high, and your income doesn't go as high relatively to yours, it means that it is harder for you to buy from my country. But of course, this dynamic can very dramatically influence the trade relations between the countries. And as a country in Azerbaijan, where we import a lot of stuff and we export a lot of stuff, it is very important to have a stable currency. I don't know if it will stay like this, but for now, I think that majority of the people are very satisfied with the currency exchange rate. And that's frankly it is.
Well, let's look at another area that's dominating the policy landscape at the moment, climate action. We saw from COP29 here in Baku the success of the worlds of investment and finance and climate action coming together to collaborate. Green bonds is one area of increasing interest within that collaboration. Tell us a bit about that, the purpose of the green bond and your outlook for that particular product going forward.
So green bonds is a product of ESG finance. So ESG means environmental, social, and governing. It has become very, very popular in different countries, in Azerbaijan too. So what's green bonds? We have to look a little bit more widely. So there are environmental bonds, there are social bonds, and there are governing bonds. So environmental bonds have mainly two directions: sustainability bonds and green bonds. Green bonds are mainly the bonds that are issued to finance green projects like windmills, like solar panels, or like something about water purification. It is green. So Azerbaijan is now have developed a green bonds taxonomy while the COP was taking place, and companies are getting more and more interested in green financing. In other countries, sometimes green finance and green investments, green bonds, are more popular because it has more filters to go to. So let's say that you are buying a vanilla bond. So you have to look at the financial reports, you have to look at the underwriting structure, their capital structure, and how they do the business. And you're thinking about, are they faithfully representing their own company? when you're buying a green bond, they're thinking that, okay, but this company, this bond, have gone through more filters, more, let's say, people have looked at it more, more audit, they have been checked much more. So it means that they have less credit risk. So they are buying, sometimes people are buying green bonds not because they're green, but because they're much more safe. And people are getting more and more, of course there are, like now Gen Z and new generation is much more interested in sustaining the world and everything, so they want green financing towards, so there is an increasing demand.
That's very interesting. So in a sense, you don't need to believe passionately in the cause for you to be able to have a positive effect on the planet.
Exactly. There is other way of this, and is that sometimes green projects, green bonds are linked to the green projects, and it can give you a very good diversification for your portfolio also. But sadly, because it's a very, very new topic, people are misunderstanding green bonds sometimes. They think that, well, if you go and ask any person, like just like passing the street, was that what do you think about green bonds? They don't even know what is the difference between sustainable bonds, green bonds, and social bonds. So, green bonds are mainly for financing green projects. Sustainability bonds can be about carbon deficit. Even there is some bonds like sustainability-linked bonds, which is that the coupon rate increases and decreases as the results of carbon emissions of the company comes down. So if they put a benchmark of, we will emit CO2 emissions on this level, this is our benchmark. If it emits much more than that, the coupon rate goes up because they didn't meet the benchmark. If it's down on that, coupon rate can go down. It's like a floating rate thing. And social bonds, ESG bonds, let's say, social bonds are more for the people, like free healthcare, low-income housing, such things. So it all comes down under the umbrella of ESG. But green bonds are mainly for investing in the green financing projects.
Very interesting indeed.
Yeah.
Well, we better let you get back to the stock exchange, but we thank you very much indeed for taking the time to come in and speak with us. Thank you.
Thank you.
Well, that is all we have time for on this edition. Please do stay in touch with all the latest business news on anews.tv and, of course, across our social media channels. And join me again next week for more World Business.